Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius and Anucauskas. Today is the 20th of January 2020. So yep, welcome everyone. Welcome to this Monday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yep, I believe you can find some useful stuff here for yourselves, guys. So visit us here on jfdbank.com and click on the research tab right here. Right, now let's jump into the charts. Now, today is a bit of a quiet day, so we do have the US equity markets closed, so the US indices are closed today. Now, we'll have a look at the silver here, the first one. Now, it's quite an interesting spot as well, so the volatility is low today as well, but nevertheless, we're keeping a close eye on a potential breakout here. Now, of course, overall, kind of from the short-term perspective, it is still trading above this short-term upside support line taken from the low of the 11th of December, and but on the other hand, it is struggling to overcome this 18.15 level. Now, we're going to keep an eye on this barrier, because if we get a nice push above it, this would confirm a forthcoming higher high, and we could see more buyers jumping in here and potentially driving this one towards the next possible area of resistance near the 18.50 mark, which is marked by the high of the 6th of January. Slightly above that, we do have another potential area of resistance, which is the an intraday swing high of the 7th of January, and that's around the 18.63 level. So, but again, before we could consider a possible move towards those levels, we need to see a break of the 18.15 level first, and only then we'll aim for higher levels. In terms of the downside, well, I mean, we need to see a drop below this upside line. First, we need to see a break, of course, and then we need to see a drop, a push below the 17.85 mark, roughly near the low of the 16th of January. And if we do see a drop below that level, then yes, we will aim for slightly lower levels. We do have another obstacle, key important area of support near the 17.65 zone, which is the low of the 14th of January, or in other words, the lowest point of last week. And but if that fails to withhold, now this is where it could become a little bit more exciting for the sellers, as this would also place the price below the 200 EMA here on the 4-hour chart, and yep, further declines could be possible. But again, from the shorter term perspective, for now, guys, keep your eyes on this upside line. Certainly, as long as this upside line remains intact, there is still more chances for this one to drift higher. But again, with the upside, we need to see a push above the 18.15 level first. But if this line breaks, if this upside line breaks, and we see a drop below the 17.85 zone, then yep, we will consider a possible slide towards the 17.65 zone, or even below that. So keep your eyes on some of these levels. Ethereum now, after managing to push nicely to the upside, strongly here to the upside last week, the crypto reached the area around the 179 mark, from which it kind of reversed and is now sliding to the downside. Now, overall, it's kind of still trading above this short-term upside support line taken from the low of the 18th of December. But in a way, given the fact that it has distanced itself, let's say, quite a lot from this line, from this upside line, we may see a bit of more declines here, or which in other words, we would class as a correction, as a temporary correction before another leg of buying. So in a way, from the very short-term perspective, how you could look at this one is if we see a drop below the 158.40 zone, roughly around here, then yes, we will aim for the 152 territory, roughly around here, and then yes, if that doesn't stop the bears, the next potential area of support could be around the 148 mark, which currently coincides with the 200 EMA on the 4-hour chart. Now, again, guys, for now, yes, there is a possibility for this one to drop lower, but let's be on the safe side, and let's wait for a drop below the 158.40 level first, and then we will aim for a deeper correction. Initially, like I said, 152, 100, and 148 zones. These could be nice targets, or even this upside support line. Now, in terms of the upside, we will take a bit of a careful approach here. Now, even if, let's say, we get a push above the high of today, which is roughly around the 167.30 mark, still we'll be very careful and cautious here, because ideally either we're going to wait for a test of this upside line and see if it actually holds and then jump into it, or if it decides to reverse, let's say, to the upside straight away, we'll probably just wait until we get a push above the 179 zone, because this way the crypto would confirm a forthcoming higher high, and we could aim for slightly higher levels, one of which could be around here, 194 zone, or even going further towards the psychological 200 mark. Now, again, for now, let's see how this is going to play out, and let's see if it actually goes for a deeper correction lower. So keep your eyes on this one. DXY. Now, DXY, I talked about DXY last week around Wednesday time, and basically I was telling you guys to keep a close eye not only on this little short-term upside support line taken from the low of the 31st of December, but also to keep an eye on this barrier right here, which was the high of the 10th of January, and till Friday this was the highest point of January so far. So we got a nice push here to the upside, you can see that. And what I was saying, that if we get a push above the 97.60 mark here, then yes, we will aim for higher levels, because this would confirm a forthcoming higher high, and our next target could be around the 97.82 zone, so which is the high of the 23rd of December. For now, we're just going to target that level. We want to see how it's going to perform around here. If it wants to travel further north, now in terms of finding another potential area of resistance, one of which could be the inside swing high of the 20th of November here, near the 98 mark. So could be a nice good potential target, but again, for now our main target is going to be the 97.80 zone, and then we'll take it from there. In case this suddenly, let's say, starts dropping back below the 97.60 zone, then, well, I mean, it could increase the chances of a bit of a correction here to the downside, maybe towards this upside support line. And if this upside support line holds, then yes, we could see another round of buying. But if this upside line starts failing, then, well, I mean, a deeper decline could be possible. For now, we are leaning more towards the upside, but again, we'll be very careful near the 97.82 zone, which is the high of the 23rd of December. Now, jumping into a few pairs, CHFJPY. Now, something that we've posted here on our TradingView account, and basically this pair here, we're kind of leaning towards the downside in a way, given that all the indices have already kind of, or should I say, continue to meet new highs, and especially the US ones. I mean, they keep printing new all-time highs, but again, this might slow down soon, and if it does slow down, then we could see a nice effect here on this pair, or in general on the yen pairs, where the yen buying could get increased, and as everybody would be fleeing into safe havens. But for now, basically, long story short, looking at this picture here on the CHFJPY, we can see that the pair overall continues to trade above this upside support line, taken from the low the 24th of November. But given that it recently kind of had distanced itself quite a lot from this upside line, and this pattern here, what it's forming, it's more of a bearish indication. So in a way, if we get a drop below this little area of support near the 113.61 zone, 60 area, then yes, this would confirm a forthcoming lower low, and we could start targeting slightly lower areas right here. Now, as you can see by the idea that we've got here, the area that we're going to be targeting will be around the 112.70 zone. Currently coincides with the 100 EMA, but probably by the time it could in a way travel here lower, it could a little bit skew here, but basically, long story short on this one, in order to consider further declines, or should I say deeper correction to the downside, a drop below the 113.60 zone would be needed first. For now, we're going to be very careful, very cautious here, and we'll continue observing this key area of support. If it drops below this, yep, like I said, increases the chances of a deeper correction. Now, in case this decides to reverse to the upside straight away, for us to consider the upside, well, to be honest, we would like to see a push above the high of last week near the 114.38 zone, and only then aim for the upside, because this way the pair would confirm a forthcoming higher high, and yes, higher levels could be possible, like the 115 or even above that. But again, for now, it seems that we had already a decent run here from this upside line, so maybe a bit more correction could be in the works here, so it could be possible. And in a way, how you could also have a look at this is if we draw a nice Fibonacci level here, a Fibonacci retracement, and just approximately examine where our potential target could be. So what we are targeting here is around a 50% on the Fibonacci, roughly around there. So let's see if it actually can do that. But again, before we could consider this move lower, we need to see a drop below the 113.61 zone first. So keep your eyes on this one. EURGBP, haven't looked at this one for quite a while, and also something that we've posted here on our TradingView account, and basically for now it's kind of stuck here a little bit, I would say. Yes, it is climbing higher from the very short-term perspective, of course. It's climbing from the 1st of January, continues to trade above this upside support line, but at the same time it's struggling to overcome this 0.8592 zone, roughly around there. So basically what we need here is a nice break of this barrier first before we could consider a possible further move higher. Until then, we're going to remain neutral. Yes, the fact that it continues to trade above this upside line, that's great for the bulls, but let's be on the safe side. Let's wait for a clear break above this level first before examining higher areas, because in case this suddenly starts breaking this upside line and drops below the 0.8486 mark, which is the low of Friday, now this is where it could become a little bit more interesting for the sellers, as it could increase the chances of a drift towards the 0.8421. Now we're only targeting this level for now because, again, if let's say for example the rate gets a hold up somewhere around here and then rebounds, we could be getting ourselves a nice wide range. For now it's just an idea, so don't focus on it too much. So just keep an eye on some support and resistance levels. So as I said, on the upside, keep your eyes on the 0.8592, and on the downside the 0.8486 territory. EURUSD. So the last one for this session, and this is what I was talking about this morning. So if you watched my morning Traders Espresso, we were hanging around here. We were hanging around this downside line, and what I was saying, that if this downside line holds and we see a slide lower, then in a way it could increase the chances of a drop below the 1.1085 zone, and this is what we got exactly. So for now we're still aiming for support this this territory right here around the 1.1066-65 zone, basically not far from this medium-term upside support line taken from the low of the 1st of October. Because if this upside line holds, now we could see a nice rebound and a pushback to the upside. But if it starts breaking, then well, this is where more bears could join in, and we could see this one drifting further down. But again, for now, until we see that break, we cannot really talk about the further declines. The only declines that we can talk about is the move to this upside support line. So for now, this is what we're targeting, and let's see if it actually can hold, or if it cannot, then yes, it could be the gateway towards lower areas. For now, yes, let's see how this is going to play out. In case this, let's say, decides not to travel to this upside support line and reverses earlier and pushes back above the 1.1103 mark here, it will still remain somewhat neutral, because for us to get excited maybe with the upside, ideally a push above the 1.1143 zone, could be the starting point from which we could start considering higher levels, but still a push above the 1.1163-64 zone would be required. So for now, keep your eyes on this one. It's quite an interesting pair right now, especially given that it's not far from this medium-term upside line. So let's see if it can test it, and if it can test it, can the upside line hold? Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, 7 o'clock GMT time. For now, I hope you have a beautiful evening, guys, and I'll see you later. Thank you very much, and bye-bye.